Hey traders, Jeff Yates coming to you from Full Throttle Traders. Want to take a couple of minutes today and walk you through the last couple of days and how we navigated this kind of unexpected volatility in the markets and how we were able to gain some success in that. Hang tight, let me show you a couple things. All right, so no surprise, the SPY on Thursday gapped down pretty heavily here. You can see the big gap down from the close, and then a $10 bar in the SPY. We did $104 million in volume in here. The second day, 96 million, so it definitely increased with that volatility. That's usually the case on a gap down. But how do you handle that? Well, number one, it's important to understand that we had a $10 day, a little more than a $10 day down in the SPY, and we closed with a 10% bar. We call this a 10-10 bar or a 5-10 bar. And nonetheless, when the market goes that far down and cannot bounce off the bottom, you almost have to predict that the market is not done yet. And consequently, we had a huge gap down here. Now, the next morning, I posted just before the market opened something in our Discord for our live traders in there that, you know, the XLE is the only sector up. We are likely to go lower and then go a little bit lower than the bounce. Then we'll bounce like a scalded dog. And ultimately, that's what happened on Friday. This was the move down. We could not bounce. There's a subsequent move down, a little bit of a lower move that bounced heavily and hardly right back here, about a $13 move higher. So we were able to take advantage of that using the diamonds. We were able to use the SPY. And a few other different aspects as far as getting in some of the weekly plays using the diagonal spreads as well. Which, by the way, if you don't have a lot of time in trading and you like to be able to get in a trade in the first 15 minutes and set it, close your computer down and go about your day, we have trades that we do that with in our network of traders that trade live with us in the morning. And then we also, if you want to be active, we trade, you know, somewhere between 6 and 12 trades a day. We're getting in. Some of them are longer dated, some of them are short dated, 0 DTs, a lot. So I won't go into all that here, but check us out at Full Throttle Traders and get your trial and take a look at some of the things that we do here to kind of fit maybe your schedule and whatnot. But I want to point out to you more than anything else is this angle retracement. I talk a lot about this in our room, and being a technical trader since 2000, early 2000s here, I've always realized that when the market, especially these days, when the market gaps down hard and it runs at this angle straight down in here, you can expect that the bottom is not in. And likewise on Friday, even though we had a higher low and we took out that had a higher high, the market still gave it up. This still held its truth, right? And I kept telling traders that unless you're going to be scalpy long, I think the market's going to take the low out and we're going to be better off to take our positions down in here in these areas for our either 0 DTEs or debits that we might want to look for higher prices. Now, ironically, if you look what happened, the market kept trending down. And at $10, we were at 1, we gapped down 1, nearly half the standard deviation, 1, 2. We were probably closer to 2.5 standard deviations at the low here. We gapped down again. We got long in here on all those credit spreads using the diamonds. The SPY, obviously, you just seen here. So it was easy money on the spreads as far as those go. We also entered a couple plays using CRWV, more capitulation type climactic drop here on the daily chart. Got in long on a weekly not thing, and also some longs on CARR. Just have been watching this kind of move down on the weekly chart. You can see the bounce off the flat weekly 200 in here. So we're likely going to gain some posture in this this move higher as well as the week goes on. We'll probably be out really shortly on this one because it is climactic at the weekly. Anyway, we do a lot of things like that in our room here, but that was probably the one takeaway I would say if you're new to trading this here. When you have these big hard days in here, don't get too ambitious to be long right away unless you stay scalpy. Wait for that low to get take out. And I'm going to say a high 90% of the time you're going to be right, especially in this market when you have high volatility. That when you don't have high volatility, it may not. But this level, we are getting 17, 18, 19 VIX, but then it's also moving. One last thing to kind of leave you with. You can see here on Thursday we came up to the 200 period moving average on the VIX in here. It's the daily, that's a free run of the daily chart. You can see in here. Now I would have thought it would have been, I'm talking about the stopping at the flat 200 because volatility is a tradable instrument as well. This is the VIX, not tradable, but just to show you. But the second day we did run higher, and this gives you a clue of where the market might be ending. Now as long as you're seeing technicals and the bottom tails starting to come in, maybe the SPY or the Qs, whichever you're trading. The Qs have been a lot weaker, the tech sell-off. Then you might want to use that as another tool in your toolbox to help determine that, okay, there's 2 or 3 matching criterias. That means that the bottom most likely might be in. So either go long or get some sort of a credit spread in place on the bull put side in the sense of the market sell-off. But that would have been a really good clue the second day. It wouldn't have helped you out the first day. If you use this primarily, you probably would have stalled or stopped in here. But it also showed that the market was not willing to bounce, that the new day was coming, right? Gap down and ran very high, and then it bounced very quickly because this shot up here went very quickly in the first 10 minutes and back down to become red, which is positive in the SPY. So a couple of good things to help you kind of navigate the market here. Just a couple of tools in your toolbox. It isn't everything, but it certainly is a couple of good things that we use in our markets. Hope to see you in the room. A lot more information like this on a day-to-day basis. Join us live at Full Throttle Traders. I'm Jeff Yates. See you next time.